Hi everyone, welcome to another weekly Forex forecast for the week ending March 6th, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to discuss the Euro USD, the Pound USD, the Dollar Yen, as well as the US dollar versus the Canadian dollar. And we're going to wrap things up with the Euro Pound. We've had some huge moves out there recently, including the Euro USD, the Euro Pound, and the Dollar Yen. So those are three pairs that you're going to want to keep a very close eye on as things continue to unfold. So let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button and also click the bell icon so you get notified every time I post these videos. Also check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. I'll show you the key levels I'm watching and how I'm approaching that pair, so you'll get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. So first up, as always, we have the Euro USD, and we had a massive reversal from this pair last week. So we've been discussing this descending channel on the weekly time frame now since September of last year, and you can see how this was the 2019 high back here, and ever since that time, this descending channel has directed the price action in an orderly way. So yeah, we had a lot of chop through here, but all in all, this channel has given us some nice swings in the market. Now, if I flip back to the daily time frame, you can see how the pair recently tested the bottom of this descending channel. And this is something I discussed when the pair was on its way to test that area. Furthermore, we had this recent close above 108.25, which exposed the 109 area based on these 2019 lows. And then we also had that close above this area on Thursday. Now, notice how we also took out that 109.90 level that I mentioned last week. So Thursday closed above it and Friday held those gains. So as of right now, things look pretty bullish for the Euro USD, especially if the pair can stay above that 109.90 level on a daily closing basis this week. So as long as it can stay above this area, we could see a run up here to 110.80. But we're more likely to see an extended run up here to the top of this descending channel. Now, that area could intersect with 111.70, which has been a factor for some time now. So I do think that we could see the Euro USD come up here and retest the top of this descending channel. And of course, a break above that area could be a significant bullish breakout for the Euro USD based on that descending channel that's been intact since the 2019 high. Of course, if we see bearish price action develop along the way, that could signal a pullback within this channel. However, just keep in mind that as of right now, this appears to be a V bottom of sorts. So I do expect continued strength here, at least over the next couple weeks. So in summary, for the week ahead, keep an eye on 109.90 as new support, and that 110.80 area could attract some sellers on the way up. But I do anticipate a move up here to the top of this channel somewhere around the 111.70 area. We finally got that drop from the British pound against the USD last week that I've been talking about now for weeks. So we had this breakdown below this ascending channel back here. So notice how we have this ascending channel that extends from the 2019 low, and the pair had been relatively stubborn ever since it broke down back here. It even came back and retested the confluence of resistance up here around 130.50. And that's based on the bottom of this channel as well as this 2019 trend line. And as choppy and indecisive as this pair has been recently, you can see how 130.50 did hold up as resistance. And last week we finally got that retest of 127.70, which was the next key support level I've had on my radar for a couple of months now. So given Friday's candle, we could continue to see some weakness here, and that's especially true if the GBPUSD stays below 128.70 on a daily closing basis. So notice how 128.70 has been support now for the last few weeks. That means that any retest of 128.70 could attract sellers and push the pair back down here into 127.70. Just keep in mind that it is going to take a daily close below 127.70 to open up that next key resistance level at 125.70. And I pointed this out a few weeks ago, but one thing you can do in situations like this to find a potential target on the way down is use a descending channel. So if I just connect the top of this channel with this high up here, all right, this prominent swing high, as well as this high up here, and I then drag the bottom of this channel down here to this swing low. All right, so let me just draw this out for you. I have these two highs up here, and I also have this low. So the bottom of this channel could serve as support on the way down. So if this trend continues to play out, right, we could see an extended move from the British pound versus the USD, perhaps all the way down here into 123.80. And this is why I mentioned 123.80 a few weeks ago, because it is based on this descending channel. Now, of course, this descending channel is a bit speculative as of this video. However, again, if this pattern continues, right, we could very well see the pound sell off not only down here to 125.70, but perhaps 123.80. But it's all going to depend on that 128.70 area staying intact as resistance. And furthermore, if we do see the pair come up here and retest this channel top and close above it, that could put an end to this short-term downtrend. Next up, we have the dollar yen, and this is one that I mentioned back when it was breaking out above this wedge pattern. So we have a multi-year wedge pattern in play, and if I zoom out to the weekly time frame, you can see that pattern that I'm referring to. So we have this upper level that broke back here. All right, so notice how we have this high up here, these highs, and also these recent ones. We then had a weekly close above this area, and the support level extends down here from 2013. We have that low, this low, and also, of course, this low. So this was a bullish breakout back here, but as I mentioned in every video I made for members, I kept saying unless this is a false break. So that's always something you have to account for. And sure enough, you can see how last week closed well below the top of that pattern. Furthermore, if I move to the monthly time frame, you can see how all of this price action has carved a bearish pin bar. All right, so this is the monthly, February just closed, and we do have a bearish pin bar of sorts with the pair closing back below the top of that wedge pattern. Now, before we discuss the coming week, I do want to point something out on the daily time frame. So a lot of people asked me last week why I wasn't talking about buying the dollar yen back when it was retesting the top of this wedge. So notice this low right here where we clearly saw the dollar yen come into the top of this wedge pattern and bounce a little bit. And everybody said, why aren't you trying to buy the dollar yen with it retesting this multi-year wedge top? And the reason is, look how aggressive this pullback is. So the pair came up here, retested this resistance level, and then totally sold off within a matter of days, coming right back down here, erasing all of these gains. This type of immediate retest right here is a sign of an imminent break. Okay, this is not a rounded retest that you want to try to buy. I always talk about this as a swing trader. You want to see a rounded retest into new support followed by a move higher. If you see a market take out all of these gains like this, and with this type of aggressiveness, this is not a buying opportunity. In fact, this is an opportunity to look for a breakdown. That's why last week on the blog, I wrote about the potential for a daily close below 109.80, confirming the false break and sending the pair lower. And that's exactly what we got on Thursday. And as I always say, a false break to one side of a pattern often triggers an extended move in the opposite direction. So in the case of the dollar yen, if we treat this as a false break up here above this wedge top, it means that we could see the pair move lower into this 106.80 level. And that's especially true because the pair did close below this ascending channel bottom on Friday. So I pointed this out on the blog on Friday and noted how a daily close below 109 would expose this 106.80 support level for the coming week. Just keep in mind too that a false break of this significance could even expose the bottom of that wedge pattern somewhere down around 105.50 to 106. So this level right down here, we could see a move past 106.80 and a retest of this wedge bottom. And if we take a look at the broader picture here, we could even see a break below that wedge support level for an extended move lower over the coming weeks and months. And one level I'm keeping a very close eye on is this 100 level, which was the 2016 lows. And of course, it's going to take a daily close below this wedge support level to expose those levels. But again, a false break to one side of a pattern can often trigger an extended move in the opposite direction. And for the dollar yen, that could mean a break below this wedge bottom followed by a move down here into the 2016 lows around the 100 handle. Alternatively, if we see the dollar yen close back above this 109.50 area, that could very well negate the bearish outlook I just mentioned, and it could also re-expose this 112.20 area up here. But my base case for this pair is a move down here into 106.80 and perhaps the bottom of this channel between 105.50 and 106. I discussed the US dollar versus the Canadian dollar last week on the blog, noting that this breakout from the confluence of resistance around 13300 could give way to higher prices. And sure enough, we saw Thursday continue that rally, and Friday also put in a higher high. So if I move out to the weekly time frame here, you can see this descending channel that's in play. So the top of this channel, you can see where we have this high up here, which is the inception point of this pattern. And then we also have this high right through here as well as this one. So last week did close above that area. So just like the dollar yen that I mentioned recently, unless this is a false break, we could see the US dollar versus the Canadian dollar head higher over the coming weeks. Just always respect the fact that it could be a false break. That's always a possibility that you have to account for. So moving back here to the daily time frame, you can see how Friday's upper wick is a bit long, but the one thing I want to point out is that the pair stayed above that 133.80 level. And furthermore, we still had this close above this 13300 area, as I just showed you on the weekly time frame. So even though we could see a retracement this coming week, again, as long as the pair is above 13300, there is a good chance that we could see a run up here to 135.30. Now, again, you have to respect the potential for a false break. So if we see the USDCAD close back below these two levels right here, below 13300, that would confirm the false break and send the pair lower. But as long as 13300 is intact as support on a daily closing basis, I have to also respect the potential for further gains, again, up here to 135.30, and perhaps that next resistance level I discussed last week on the blog around 36.50 or so. The euro versus the pound is up next, and as you can see, this reversal has played out beautifully for us. So I've been discussing this pair ever since it bottomed out down here, and I said that the reversal potential was intact as long as this 2019 low was also intact. So if you'll notice, this low back here never did take out that 2019 low, so the reversal potential was always there. Furthermore, we have this potential double bottom, but of course we were waiting for a daily close above 85.90 to confirm that double bottom. Notice how 85.90 was support back here, and then that level flipped to resistance back here. Now, if Friday's close is legitimate, we could very well see 85.90 serve as support. However, keep in mind that Friday moves are not always as reliable as other candles. So it's all going to come down to where Monday opens. If the pair opens down here below 85.90, that could signal weakness for the euro pound and even a return to some of the support levels that I've been discussing now for a while. However, if we see an open at Friday's close or even just above it, that could keep this 85.90 area intact as support. So the bottom line is that it's all going to come down to where Monday opens. And keep in mind too that we have another resistance level up here at 86.80, followed by that 8800 level that I've been discussing now since late January. So I am still bullish the euro versus the pound, especially now that this double bottom could be confirmed. However, again, it's all going to come down to Monday's open. As long as we see the pair stay constructive, we could very well see a retest of 86.80, that 8800 area, and perhaps even 8900 over the coming weeks and months. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.